See 4.10. From the following information, prepare balance sheet of the firm. So we'll be preparing a balance sheet. And whatever information we feel we can find out, of course, we'll be getting answer of total assets and total liability. Stock turnover ratio based upon COGS, rate of GP to sales is given, sales to fixed asset is given. There will be fixed assets. Of course, there will be current assets. Average debt collection period. So in current assets, I will be also getting answer of debtors. Current ratio is given, liquidity ratio is given. Now I assume in liquidity ratio, there are no bank overdraft, there are no prepaid expenses, no outstanding expenses. There is only one thing, which is stock. Net working capital is 8 lakhs. There will be current liabilities. Net worth to fixed asset, reserves and surplus is 0.25 times. Long-term debt is nil. Always first take into consideration the point net working capital 8 lakh, a nominal figure is given. I am having current ratio. I can always find out current assets and current liabilities. Net working capital is equal to current assets minus current liability. 8 lakh is equal to current assets minus current liability. Also, current ratio is current assets divided by current liability. Current ratio is 2 into current liability is equal to current assets. So 8 lakhs, instead of current assets, I can write down 2 current liability minus current liability. So current liability is 8 lakh rupees. If current liability is 8 lakhs rupees, the current assets will be 16 lakhs rupees. I've got two answers. Current assets 16 lakhs and current liability 8 lakh rupees. I have used the current ratio. I have used net working capital. Now liquid ratio is given. I can use that liquid ratio. See how I am drafting liquid ratio. Liquid ratio is equal to current assets minus stock upon current liability. This is what I was telling you. I am assuming there are no prepaid outstanding expenses. I am assuming there is no bank overdraft. Then only I will be getting answer of stock. Liquid ratio is 1.25. Current assets 16 lakhs minus stock upon 8 lakh. So stock will be 8 lakh into 1.25, 10 lakhs minus 16 lakhs is 6 lakhs. So stock will be 6 lakhs. And this will be closing stock. Because whenever you are finding out current ratio and quick ratio, they are always from balance sheet, and balance sheet will always portray closing stock and not opening stock. I have taken into consideration liquidity ratio. Long-term debt is nil, all right. So we have taken into consideration this. Average debt collection period, for that will require sales. Sales to fixed asset is 2 times, so we cannot find out that. stock turnover ratio based upon COGS. So we can find out COGS from that point. Stock turnover ratio is equal to COGS upon stock. Now I am assuming average stock is the same as opening stock and closing stock. So closing stock is equal to opening stock is equal to average stock. Stock turnover ratio is 7 times. COGS and stock is 6 lakhs. So COGS is 42 lakhs. Rate of GP is 25%. So if 100 is the sales, GP is 25 and 75 is COGS. Here COGS is 42 lakhs. By cross multiplication, I can find out the answer. 42 lakhs divided by 0.7, which is 56 lakhs. So once I have got sales, I will be getting answer of a fixed asset. Sales to fixed asset is 2 times. Sales is 56 lakhs divided by 2 is equal to fixed asset. This is 28. Fixed asset is 28 lakhs. Which is in my balance sheet. So I'll be getting this 44 lakhs. This is 8 lakhs. So reserves plus equity. Equity will always be there. Reserves plus equity will be 36 lakhs. We have used this, we have used this. Net worth to fixed asset is 0.9 times. Net worth to fixed asset is 0.9 times. Fixed asset is 28 lakhs. I'll be getting net worth 28 lakhs multiplied by 0.9. 25 lakh 20,000 rupees is nothing but net worth. Now what is net worth? Understand, net worth is nothing but equity share capital plus reserves and surplus plus preference share capital. Here preference share capital is not there. So equity share capital plus reserves and surplus is 25 lakh 20,000 rupees. Which is different in our answer. We have already got the answer of 36 lakhs rupees. See, it is difficult in examination. I am doing it after seeing suggested, so it is easy for me, but there is no way out but to ignore this formula. Don't take into consideration what is given, that is net worth upon fixed asset. You can understand or treat this as an incorrect question, but we will have to, they have also written in suggested, you will have to ignore this equation. If you consider this equation, there will be n numbers of other assumptions which will be there. So let us go ahead with this. Even in this question, it is not clear over here. Reserves and surplus are 0.25 times of what? They are considering one is equity, then 0.25 is nothing but reserves and surplus. Here also alternate assumptions can be taken and your answer will be absolutely correct. So what will be equity and reserves and surplus if total net worth is 36 lakhs? One is to 0.25, that is 36 lakhs divided by 1.25 is 28,80,000. Into 0.25, 7,20,000. So reserves and surplus will be 7,20,000. Sorry, I need to write it down in inner column. 7,20,000, and equity is 28,80,000. Sir, what if we have got a different answer in our examination? Your answer is absolutely correct. Till the time they say what is this reserves and surplus. Why I have taken this? I have taken the same assumption as it is given in suggested. You may take different assumption. Your answer might be different. You will be getting full-fledged marks. This is 44 lakhs. I can still find out one answer, which is debtors. Average debt collection period is 1.5 months. I am having answer of sales 56 lakhs is for 12 months. Then 1.5 months will be debtors. ₹7 lakh. 7 lakh is debtors. So I'll be getting answer of other cash in bank or other current assets, which will be 3 lakhs rupees. This is my balance sheet as far as this question is concerned. That is 4.10. What was difficult point in this question is not the question itself, but you'll have to ignore this ratio to get correct answer. If you consider that ratio, then you will be there in a loop where you will not be getting any answers, but you will be going round and round in the question. In examination, I understand this is difficult to cancel out, but you can treat this question while revising your chapter. You can treat that this question is a mistake question asked by institute. C 4.10.